Welcome, everyone. Thanks for dialing in. All right, should we get started?
Good to go.
A couple minutes passed. All right, let's do this. Well, welcome, everyone. Thanks for joining us. If you're dialing in, be sure to drop your name in the chat and where you're calling us from and what you're interested to learn today. Hi, looks like we have some Canadians. Great to have you all. So welcome to Accelerate Energy series. And this is a series of events by New Energy Nexus, where we are exploring the inquiry, how do we accelerate the global clean energy startup ecosystem to be diverse, inclusive, and economically empowering? And we know that in order to accelerate all the clean energy ventures and ideas that are out there in the world, we have to have a multifaceted, holistic approach. So we've hosted conversations around imagining the clean energy ecosystem of 2030. We've talked about the interaction between policy and energy innovation around the world. We've touched on best practices for collaboration between corporates and startups. And today we're going to talk about climate FinTech and what it means to have an emerging ecosystem of climate capital catalysts. So today we'll talk a little bit about all the different financial levers and all the movements that we see happening and what this might mean both for the clean tech movement and for the financial innovation ahead of us and what that means together. So I'll pass it over to Andrew to share a little bit more about the project team, New Energy Nexus, and then we'll dive into the report.
Fantastic. Neha, thank you so much. Just pulling up my slides here. Can someone give me an okay if they see my slides? Awesome. Welcome everyone to the inaugural Climate FinTech webinar. We're super excited to be here to be presenting this report to you. It's been almost a year-long journey putting together the number of interviews in this report. And this is only the beginning. So we're very excited to share this with you. Before we get started into the report, I just want to do a quick round of introductions. Again, my name is Andrew Chang. I'm based out of Shanghai, the program director for New Energy Nexus. I've been with New Energy Nexus for almost four years now. And my background is in solar marketing and startup acceleration. So I've been working in Asia for almost about five to 6 years now. Before I pass it over to Aaron and Yafu to do introductions, I just want to give a nod to Mr. Danny Kennedy and Christina Borsum, our CEO and CFO, that have also been with us during this entire journey, supporting us for this Climate FinTech initiative. Aaron, do you want to do a quick intro?
Sure. Hi, everybody. Thanks for joining us from all over the world, it appears. I'm Aaron McCrary. I'm the Climate FinTech lead here at New Energy Nexus, covering the US and European regions. I have a background in finance, was an early employee at a couple of crowdfunding platforms, and then worked in institutional asset management at a firm called InvestTech. A new member of the team here at New Energy Nexus this year, and excited to share with you guys.
Thanks, Aaron. Yafu?
Hi, everyone. This is Yafu Zhao. I'm based in Shanghai. I'm the climate fintech lead covering the Chinese market. I have a background in clean energy financing within the insurance group, and also risk modeling experiences within the digital bank. So climate fintech is really an exciting project for me. And thank you everyone for joining us today. Andrew?
Fantastic. Yeah, so just before we get started, Aaron and Yafu have been sort of the champions behind this report, putting together a 100-page report. So we're excited to share that with you today. Just before we get into climate fintech, I want to give you a brief introduction of New Energy Nexus. We're an international organization that supports clean energy entrepreneurs with funds, accelerators, and networks. We started in California and now run programs in China, India, Southeast Asia, and East Africa. So just to give you a little idea of what we do around the world and where we operate. So, we actually started in California in 2004. And as you can see, we've moved across the map over the years with quite a heavy concentration in Asia, because we believe the battleground for climate change is in Asia. We have various funding partners that we work with and different offerings and different programs for entrepreneurs. And so some of our programs are grant funded. Some of our programs is focused on corporate innovation. So as you can see in the top right corner, we work currently working with LG Chem and Hyundai Kia, focused on a EV and energy storage innovation program. And through our California, New York programs, our New York program is focused on building energy efficiency, and California is focused on early stage clean tech entrepreneurs. So excited to share all this with you in our global network. So how we support startups, we do it in 4 ways. First, we launch. So for early stage startups, we run events, hackathons, launch pads, help teams bring about their ideas and find other team members. Number 2, we accelerate. So we also, sort of as a part of the next step, we help them formulate their business model, get them registered, and build products market. Number 3, we fund. So as I mentioned before, through some of our programs, we fund through grants, and we also fund through equity. We just established our venture arm out of Singapore, focused on Southeast Asia. Lastly, we scale up. So for later stage companies, growth stage companies, we help them develop pilots with corporate partners to develop POCs, proof of concept projects, and ultimately commercialize. So that was just a brief intro of New Energy Nexus. Now, I'd like to get into the table of contents for today's presentation. First, we're going to do just a brief introduction as to what is climate fintech. Why are we doing this? What's the point? What is our mission? After we've defined the climate fintech and the ecosystem, we're going to dive into some of the case studies. We've pulled out various startups and companies around the world to showcase. Number 4, we're also going to dive into geographic observations in US, China, and Europe. Lastly, we're going to do a final sharing of our takeaways and a final call to action. So without further ado, I'm going to pass it to Mr. Aaron McCrary to take it from here.
Great. Thank you, Andrew. And hello again, everybody. Thank you all for joining again from all around the world. This report has been a true team effort. We've distilled over 100 interviews from financial institutions, from clean tech VCs, from climate scientists, and from climate fintech startup companies. And some of you have joined us on the call today. We're eternally grateful for your contributions to this research effort. And we are also grateful just for the ability to share these findings and to work on this project during such a complicated and trying year. Another thanks goes out to the Hewlett Foundation, who has enabled this work. And we're really excited to share this with you. And indeed, 2020 has been a historic inflection point. COVID-19 pandemic will be seared in our memories for years and years, but this is not the only challenge we've faced as a collective humanity. There has been record wildfires, there has been record heat waves, and hurricanes around the globe. Now, this year has also been a historic inflection point for the energy transition and for the flow of capital which finances decarbonization. Last year, for the first time ever, renewables made up the majority of the world's new power generation, And in 2021, spending on renewables is set to overtake oil and gas for the first time ever. The clean energy investment is projected to be nearly $3 trillion. You can go to the next slide, actually. $3 trillion a year, and this understanding is motivating some real action. So we've seen legislation by the European Union for a $500 billion Green New Deal, the European Green Deal. We're seeing significant increase in capital flows. But while these gestures are encouraging, there is no vaccine for climate change. This is a problem which requires a lot of different types of solutions working together cohesively at the same time. And those include policy action, financial product innovation, the improving economics of clean energy, and the focus for our report today, which is the integration of digital financial technology known today as FinTech. So what is climate FinTech? Climate FinTech is digital financial technology which catalyzes decarbonization. Now, FinTech has already demonstrated its ability as a highly scalable disruptor to the financial industry. Technologies such as big data, artificial intelligence significantly increase the ability to make decisions and encourage transparency, inclusion, and innovation. Now, climate FinTech is simply the intersection of climate, finance, and technology. These digital innovations, applications, and platforms serve as crucial intermediaries for those who are pursuing decarbonization. And so this report is really an attempt to build an umbrella, to build a conceptual umbrella of this space and what it might be comprised of. So looking on the right side of the slide, these are the core chapters of our report. Our goal today is not to walk through the whole report with you, as it is 100 pages, over 120 citations. And so we wouldn't do that to you, but we do want to play a little bit of a tour guide through some of the core points of the report. And these 8 financial categories, which you see on the right side here, are 8 subject chapters within the report that we discuss business models, viable business models within each of these. So our research was guided by 4 questions. What is climate FinTech and how is it defined? We just talked about that. What business models are successful in practice? 3, how do these companies grow? What sort of support systems and stakeholders need to engage in order to have the maximum impact? And 4, how do these very important and very different geographies vary from each other? China, Europe, and the US, comparing those markets, the geopolitics, and their respective climate FinTech ecosystems. I just want to highlight actually that we're trying to sort of simplify complex business models by answering these questions. And we truly believe that big data, artificial intelligence, these types of applications can increase access to limited capital, can improve carbon accounting and the cost burden of green bond issuance. So the tides of decarbonization have reached our shores, and now we must build the best surfboards we can to ride these waves. So before we get into the nitty-gritty, a little bit of background and history on research in this space. In 2017, the United Nations created a task force on researching the digital financing of the Sustainable Development Goals. Now, some of you are probably familiar with these 17 Sustainable Development Goals, and our focus with climate FinTech are these 2, number 7 and number 13. So number 7 is clean and affordable energy. Number 13 is climate action. And so we are focused on how FinTech can advocate for these two SDGs in particular. Now, perhaps the most important takeaway from this report is that climate FinTech has both upstream and downstream benefits. So impacts for citizens and institutions alike. These tools, these digital tools, can improve financial decisions of both citizens and institutions, helping all of us to save, spend, and invest in ways which put the planet first. These technologies now have the ability to make customers more conscious when shopping for clothing and deciding when to travel, and assists asset managers in building more climate-aligned portfolios for their clients. It helps insurance firms better analyze weather perils, and it gives regulators increased transparency to hold the largest corporates accountable to their carbon agreements and initiatives. Now, upstream and downstream is not meant to symbolize more or less importance. It's simply to acknowledge the flow of capital in the financial system. Speaking of the flow of capital in the financial system, we've tried to do a little scene setting here. This is a diagram which shows the key stakeholders with climate FinTech startups at the bottom, the ecosystem which nurtures them and de-risks them with universities, accelerator programs, and private capital, and the pathway to integration into the financial system, helping to mobilize capital using digital technology with the end goal on the right side of financing projects for decarbonization, electrification, resource efficiency, and renewable energy, of course. So this is a really important page in our report, and we encourage everyone to download the report when we finish today and take a deeper look at this. Now, again, on the left side, we have our 8 core chapters. This is the breaking up of the financial system into business units. And this page is really a top-down view where a financial institution could say, these are our areas of business, and these are the ways in which we can use technology to decarbonize. So each of these have their own chapters, and on this page, there are viable business models that are displayed within each of the 8 categories. We've also done a mapping on the right side of the applied technology which is used. So just as an example, if you were to start on the top on the left at payments, and you would look 3 over at sustainable e-commerce, you would then see that sustainable e-commerce has a blue and orange coloring on it. So you would use that as a reference to the right side, and you would see that big data and artificial intelligence are heavily used in sustainable e-commerce. Another example, looking on the blue chapters here for third down, actually let's do fourth down. Equity crowdfunding is the first one. You'll see a green coloring underneath that business model. And so you refer to the right side here and you see that they are using a big picture framework of platform marketplaces and crowdfunding. And so we've mapped these business models here, and I know Yafu wanted to add a few to this discussion.
Mm-hmm. Yeah, thanks, Aaron. So in terms of trading, we can see a lot of applications, no matter it's carbon trading, renewable energy trading, or distributed renewable assets tradings under these categories. And mostly blockchain technologies are heavily used in this category. Risk analysis is actually the foundation of all other categories, whether it's investing, lending, or trading. Implementation in this category. We have other applications that mapped out climate change scenarios, also the transition risk analysis. So insurance tech application is actually a innovation based on the risk analysis. With better insurance companies can come up with better pricing and claim strategies, as well as some of the innovative product, such as the solo revenue put that actually guarantees constant revenue for solar power stations. And regulation tech, known as RegTech, it's a special part of the ecosystem. There's a automated report generation, real-time monitoring, and by using big data and blockchain, it allows the regulators to better monitor the financial institutions as well as other stakeholders in the ecosystem. I'll pass on to Aaron.
Great. Thank you, Yafu. Just to reiterate, this could be looked at from a number of perspectives. One, if you are a large financial institution, but two, if you're an entrepreneur, you can look at these business models and know that there's viability here, that the financial system needs more of these products and services and technologies, and that if you know that a bank, for example, is not using climate risk analysis in their lending program or in their credit systems or in their investment decision making, you can build a solution for them that they would be interested in. So these are to be explored and pursued by both ends of the marketplace. So during this year and during our research, we've collected and built a database of 250 climate fintech companies from around the world. Now, this is not an exhaustive list by any means. This is just a first attempt, and we recognize that this data will shift over time. But some interesting trends appeared to us as we looked at the data. Number one, 75% of climate fintech companies are early stage. So having received 10 million in capital or less. And this indicates to us that this is still a young sort of market opportunity and an interesting space for both VCs and angel investors to participate in, to de-risk, and to facilitate the scaling of these startups. Number two, there's definitely consistency in the growth stage representation, which again reinforces the commercial viability of these business models. Number two, you'll notice a little bit more acquisition activity on the risk analysis row here. That's because financial institutions are increasingly using ESG analysis, using geospatial data to help them price assets and make investment decisions. On the right side, you'll notice some weightings here, geographically speaking. Europe has by and far the largest representation of climate fintech companies, followed second by the US. Now, the 8% represented in China, however, arguably taps into a much larger population, a much larger citizen usage and penetration in the Chinese market for those using ant forests and financial products. And so we don't feel that this graph represents a population penetration, but more so just the number of startup companies uncovered. And then the other section covers Asia Pac, Africa, Canada, Latin America as well. So just as sort of a tour guide, we're gonna walk through a couple of example chapters. Banking is indeed one of the 8 categories, financial categories and chapters of the report. And within it, we cover a little bit about retail banking, a little bit about commercial banking. We talk about the use of open banking, which is the sharing of APIs between third parties and fintechs, as well as the incumbent financial institution. And as many of you know, neobanks have really come onto the scene in the last few years. These are banks which do not conduct transactions in person. Their operations are entirely online. And neobanks have an interesting advantage over larger banking incumbents when it comes to their relationship with fossil fuel interests and their ability to offer products and services around decarbonization. And so on the next page, we explored a case study of banking, which was Aspiration. Based in the United States, Aspiration has grown significantly over the last few years, with its highest rate of customer acquisition this year during the COVID-19 pandemic. And it's no surprise, as people don't want to leave the house, they want to bank remotely. And Aspiration has done a good job of offering products and services for their retail customers, which empower them to decarbonize. So, for example, they have the Aspiration Impact Measurement System, which lets customers track their shopping habits and the impact as they choose brands. They also have a credit card, the Planet Protection Program, which automatically offsets any purchases at the gas station as you're driving. And so these types of products are increasingly popular with millennials and with Generation X. So this is a super important space to nurture as more and more citizens become climate conscious and want to work that into their personal finances. So another chapter in our report is investing. There's a lot happening with climate fintech in investing, largely around the use of big data and artificial intelligence to synthesize more information and improve decision-making abilities. There's also been a tremendous wave of sustainable investment that's been happening, as we've mentioned, all around the world. As Bill McKibben said, you better hope you weren't long investing in oil going into the COVID-19 pandemic, because you not only helped wreck the planet, but you also lost your shirt. And what he's saying is that ESG funds, sustainable funds, have significantly outperformed traditional indices and fossil fuel investments over the last few years. And this has propelled significant capital flows into these solutions, into these products and services. I want to talk about this. Sorry, Andrew, I just wanted to point to this graph, the 27x, quickly to point that there's tremendous impact that individuals can have with their pension, with their savings, in the way that they invest. 27 times more impact on decarbonization than if you were taking the train instead of the car, or taking less flights per year. So something to keep in mind, even at the citizen level, how we can have an impact. We did a quick comparison case study in the investing chapter as well between Swell Investing and Open Invest. Swell Investing was created within an insurance company named Pacific Life. And for a while, they had some strong customer growth and were managing tens of millions, but they encountered a number of issues with the ability to tap into Pacific Life's legacy customer base. And so they hit a wall with customer acquisition. They didn't have enough assets under management to scale, and the parent company eventually terminated the business. Now, on the right side, Open Invest has seen tremendous growth. They allow for both retail and institutional investors to use their platform to select ethical standings based on things like decarbonization or gender empowerment or corporate governance. And it's a very easy and streamlined way to see how your investments are having an impact. And these types of robo-advisory solutions are becoming increasingly popular in all three regions. All right, Yafu, I'll pass it to you for this one.
Okay, thank you, Aaron. So in the world of investment, return is always associated with risk. So evaluating the climate risk is vital, especially with the climate change and renewable technology innovation. The returns from the carbon-intensive activities are increasingly undermined by outside risks. And there are physical risks, climate risks such as the sea level rise, catastrophes, and the wildfire resulting from extreme weather, and transition risks that include policy and legal risk, technology risk, and etc. And the traditional ways of evaluating this risk is insufficient, costly, and inadequate. And by leveraging AI, big data technologies, climate fintech startups in this category are able to collect data from satellite, sensor, and social media and process it in real time with more advanced algorithm and come up with more accurate prediction model. And ESG risk analytics is a trending business model in recent years to evaluate transaction risk due to rising demand of sustainable investment, and climate risk analysis is part of it. There are quite a few promising startups in this category across all regions, such as Carbon Data, FinTech, and Sustainalytics, with emerging and acquisitions from major financial incumbents such as Moody's, MSCI, and Morningstar. That represents the mainstream financial institutions have adopted this concept, and this area is rising rapidly in recent years. FinTech is one of the example in China. It utilizes AI, and by utilizing AI and big data, they provide ESG data, rating, and index services, as well as sustainable wealth management. And with these technologies, they are able to expand the traditional data sources from voluntarily disclosed CSR reports to alternative data sources, such as website of regulators, social medias. Because the thing is, only 30% of the public companies in China disclose the emission-related data. So that's not enough. And also, FinTech has expanded the data points from around 30 to 300. Now they are able to cover around 800,000 public and private companies in China, and it really provides a smart tool for decision-making for the investors. Now, those are the highlighted categories out of the 8 financial categories we covered, like payment, lending, investing, and etc. And you can find more case studies throughout the report. I know some of the case companies are joining the seminar today as well. We want to appreciate to your great insights and contribution to the report. In the following session, we will share with you the geographic consideration across China, Europe, and US to study and compare these most important markets. We'll introduce the regulatory and political environment, capital flow, innovation culture, as well as the key learnings in these regions. So let's look at China first. Here I will share with you some of the high-level observations. Number 1, China has fewer climate fintech startups than other 2 regions, despite its substantial renewables and green finance markets. Number 2, regulation plays an important role in this policy-driven, centralized green economic system. And number 3, climate risk and ESG risk analysis are the most promising verticals, and it is the same with other 2 regions as well. And finally, climate fintech startups play the role of enabler rather than the disruptors. Let's dive deep into more details. For those of you who are not familiar with the Chinese market, I'll give you some basic introductions about the background. So the regulation and political environment is different than its Western peers. There's a top-level design with the local pilot tests to build a climate finance system. Since it's a more centralized system, the policies are usually more effectively implemented than the other 2 regions. So there are a few top level regulations I list here that guide the sustainable development in recent years in China. In 2015, the central government issued the Integrated Reform Plan for promoting ecological progress to establish a systematic and complete institutional framework for promoting ecological progress. And the 13th five-year plan for economic and social development sets specific goals to certain industries, such as the renewable energies, electronic vehicles, and which made China now the top market in this in the world. And the upcoming 14th five-year plan, and we believe there will be heavy emphasis on the renewable market as well. So the 2016 guidelines for establishing the green financial system really set out additional rules for the development of green bond, green loans, and green insurance. It's the foundation of the reform of the climate financial system in China. And in the following years, 8 cities were in 5 provinces were chosen as a pilot test to implement these greens. Like in the cities of Huzhou, they have updated their monitoring system with the PBOC, which is a regulator, as well as the local bank or Huzhou Bank. They upgraded their credit management system to a green credit management system. And this also provided the initial opportunities for some of the startups like Uni-Inclusive to help with the sustainable development. Speaking of capital flow and stakeholders, and as you already know, China is now the largest renewable market in the world, accounts for about half of this of the solar and EV markets. And bank green loans are so far the largest source of climate finance in China because banks account for half of the financial market. Green bond is the second largest and fast growing source of climate finance in China. And in 2019, China is already the second largest green bond issuer. And in this year, it's likely to surpass the US and become the largest green bond issuer. However, equity investment in low carbon projects remains very small, and foreign capital does play an active role in sustainable investment in China. As early this year, China has lifted the quota for QFII. So there's no limit of foreign capital to invest in China. With the inflow of these foreign capitals, it also brings the international standard of sustainable investment to China. So the asset managers in China are following these investment framework. For the innovation culture and startup ecosystem, I know China, the economic miracle of China has heavily used to rely on the cheap labor and massive market. And now the engine has gradually shifted to the innovation. If you look at the number of R&D expenditure during the past decade, it actually increased dramatically from around 5% to 26%. Also, the number of talents, like the graduates from universities with a background in science and technology, ranked #1 in the world. These are very important foundations to support the innovation ecosystem. Nowadays, some of the tech giants like Ali and Tencent are dominating some of this FinTech innovations. Other financial incumbents, such as China Industrial Bank, which is also a leading green bank in China, are catching up, and they have established a FinTech subsidiary called FinTech to provide open banking and green banking services to in the industry. So let's look at some specific observations in this market. As I have mentioned, investment risk analytics, especially ESG climate risk analytics startups, show the fastest growth among all business models, the same with other 2 regions due to the increasing demand of sustainable development. And the ecosystem can be broken down as shown in a chart in a graph on the left side. And we observed that the climate fintech startups position themselves as the data provider in this whole value chain. And secondly, the climate fintech in the lending industry is likely to mobilize greater amount of capital. So there are two major business models in the lending industry. Number one, climate fintech startups help the banks to upgrade their green credit management system by using AI as well as big data. Or so usually the application is cloud-based. They develop the APIs to connect the bank and the data. The second model is using the blockchain to help the distributed renewable assets be better financed by these financial institutions, because blockchains provide a transparent, immutable, and verifiable network to record the transactions. So it reduces the due diligence costs and increase the efficiency for the financial institutions. Regulation tech is a unique market. It is comparatively small, but has a very significant impact in China. As we mentioned, that policy is very important in China. And lastly, we have a successful case in consumer behavior in China, and that is Ant Forest. The within 4 years, it has attracted about more than 700 million people around on the planet to using this app, reducing the carbon emission by changing their everyday behavior. And also they help to plant more than 120 million trees. So all of these observations are unique in China and compared to the other two regions. Now I will pass on to Aaron to talk about the other two regions.
Great, fantastic. Thank you, Yafu. Hi, everybody, once again. Just doing a quick high-level review of the climate fintech ecosystem in Europe and the United States. Now, as I mentioned earlier, Europe is the leading region for climate finance and for climate fintech, representing 43% of the ecosystem that we surveyed. There's a very strong culture of open innovation within the largest European banks, such as Barclays, ING, BNP. And although there are some commonalities between the European member states, I don't want to put them all in one bucket. They are, of course, different countries, and they are nuanced in some of their climate action and their policies. Just on the regulatory and political environment, Europe has taken some really impressive climate action and policy in the wake of the COVID-19 pandemic. In June of this year, they adopted the EU taxonomy, which sets emission standards across the whole European Union and holds financial institutions accountable on their investment activity and reporting guidelines. So it sort of puts teeth to the Paris Climate Accord and actually holds metrics and measurable accountability of these banking institutions. Soon thereafter, in July of this year, the European Commission passed the European Green Deal, which is the largest stimulus package ever passed for decarbonization, over 500 billion euros, which will be invested over a 4-year period, stimulating the market for electric vehicles, electrification of the grid, and promoting energy efficiency throughout the region. And a surprise to me this week, the United Kingdom, UK Prime Minister Boris Johnson announced that they would be banning the sale of fossil fuel vehicles in the United Kingdom after 2030, about 10 years ahead of schedule. So all of these policies have heavily influenced the flow of capital. And actually, much of the early momentum in ESG investing came from Europe. So this groundwork is now paying dividends. In the last year, there was an investment of 120 billion into sustainable funds. You'll notice this massive increase in Switzerland over the last year in sustainable investing, over €1 trillion, representing a 62% increase in a single year. Now, investors are now taking this step a step further. It's really interesting to see these funds being created that are actively shorting oil and gas and transition risk. BNP Paribas has this environmental absolute thematic fund, which is shorting companies with significant stranded assets or that have technologies that are outdated and inefficient to address climate change. I also want to talk a little bit about the innovation culture in Europe. Although Europe lacks a concentrated innovation hub like Silicon Valley here in California, its member countries are home to many robust innovation centers. So for example, in this image here, you're looking at Station F in Paris, which is the largest physical startup facility in the world. There's accommodation for 1,000 startups there, engagement with companies like Microsoft and Google, really impressive space. In Switzerland, there's some very strong accelerator programs, one called F10, which is known for its FinTech acceleration and success and engagement with UBS and Credit Suisse. And nearby in Switzerland is Zug, which is the blockchain and cryptocurrency capital of the world, sort of setting the tone and researching decentralized ledger applications in things like agriculture and sea transport. One last nod also to Climate Kick, which has an accelerator program focused on sustainable energy and climate resiliency, and they have a presence in 30 different cities in Europe. That's actually supported by the European Union. And then lastly, just reiterating that these banking institutions in Europe really have strong open innovation efforts and open banking efforts where they share their APIs with third-party providers. They encourage the sort of engagement with external FinTech solutions, and really sort of foster this idea of matching business units with relevant external solutions. So for example, BNP Paribas runs a FinTech accelerator in that Station F space. Just recapping quickly, pretty heavy weight of climate FinTech companies in Europe, some encouraging movement around blockchain. Spain was the first company to use blockchain to issue a green bond. And there's also some work being done on remittances and payments in Germany. I do want to highlight this finding that only 5% of the fintechs in Germany are delivering on the United Nations Sustainable Development Goals. Now, this is indicative of a wider problem, of course, because Germany is quite progressive on their climate action. And so if Germany is only 5%, I think that we can infer that other countries are a much smaller number there. And we really have to foster this space more deliberately. Moving to the US, as you're all aware, the United States has had quite a hectic year. And this is for many reasons, the management of the pandemic and the sort of awakening around racial equality and the exposure of broken social systems here in the States has culminated in an especially volatile year. And interestingly, these challenges have provided fertile grounds for important reflections around climate change and around, and actually catalyzed record-setting investment into ESG as a byproduct. The innovation centers and engine of the United States remains intact, and with pending regulatory action and climate policy, with the Biden administration coming in and with the Senate sorting itself out in January, there is the potential for some of these major climate actions to take place and the potential for a decarbonization renaissance in the United States. In 2017, the US left the Paris Climate Accord, and that obviously was an unfortunate development for us here on an international level and a national level. However, states have continued to take regional action. There's something called the US Climate Alliance, where states have continued to uphold the Paris Agreement. And there's also been a noticeable shift in the economics of coal and the production of electricity from the coal industry, while renewable sources of energy have become more affordable and even cheaper than coal. And so the economics now have created a dynamic which is irresistible to the financial industry and catalyze significant investment into these solutions. Yeah, we could keep it. Let's see, sorry. Just to reiterate, the United States is undergoing a moment of transition. I think that there's some reason for concern still, of course, but also some reason for optimism with the distribution of vaccines coming in the winter and spring, with a new administration, and hopefully with some unilateral climate action, which will propel climate fintech innovation in this space. So we do think that all of these elements could align in a way where there's significant focus on climate tech, climate fintech in these innovation hubs, and we start to see this a really rich ecosystem here in the United States. Great. You know, this has just been a very high level review of a report that we've been working on all year. And we really encourage you to dive into the downloadable copy. We're going to share a link with you shortly. You know, definitely want this to just be the beginning of a conversation. By no means is it exhaustive. Just reiterating some key learnings that climate fintech has both downstream benefits to citizens and upstream benefits to financial institutions. 75% of this ecosystem is still early stage. So this is an opportunity for angel investors and venture capital to facilitate scale and de-risk these solutions. 5% of these fintech solutions are delivering on the UN SDGs, so actually a much smaller percentage are directly focused on decarbonization. So we all have a responsibility to sort of have this conversation more deliberately, to talk about climate fintech as its own ecosystem to be nurtured, and that will increase the activity levels and the commercial viability of these solutions. If you work for a bank or an asset management firm, I strongly encourage for you to advocate internally for open innovation, as well as the implementation of ESG practices and climate risk analysis in your investment decision making. Great. So this is sort of restating what I just said, but for institutions, we implore you to advocate for innovation internally and externally and have these conversations with stakeholders. For investors, private capital, please think about this space as a focused investment thesis of your own, a way for you to be an impact investor and to leverage the scale of FinTech. For citizens, we are encouraged by how much education has played a role in the ability of citizens to apply pressure on institutions and governments to make the changes that are most beneficial for the planet. And for climate FinTech startups, we're really excited about where you are right now, which is the right place at the right time. And we're going to be working really hard over the next year to build an accelerator program and to provide resources for those who are interested in nurturing this space. Thank you all, and I'll pass it to Andrew.
Aaron, Yafu, thank you so much. I'll take it home from here. So just again, just want to reiterate, thank you everyone for joining us. Please go ahead and download the free digital copy. You can access it at newenergynexus.com/climate-fintech-report. It takes you to a website where you fill in your information and we'll send you an automatic link to download the report. And please do keep in mind, it is a 100-page report. Again, it is not our intention for you to read it in one sitting. We would like you to use it as a tool guide, use it as a toolkit, share it with friends. If you have any feedback for us, we'd love to hear it. I just want to acknowledge all the companies, partners, startups, financial institutions, friends, and family who have supported us throughout this entire journey. We are humbled by your knowledge and optimism and vision for the future. We understand this year, 2020, has been a very tough year for everybody, and we appreciate the opportunity to share this with you, and also for you to have the headspace to think about how can we build a better future together that's more sustainable and better for the environment. And so we included our contact information below, mine, Aaron, and Yafu's email. And before we move it to questions, to Q&A, I do want to sort of just give you a high-level overview of what the purpose of this Climate FinTech report is. Why are we doing this? And as we mentioned before, this is part of Hewlett Foundation's climate finance strategy. And it's a 3-phase initiative, 3 phases. So we've only completed the first phase, which is the pre-launch scoping. This report is essentially the ecosystem mapping of all of our learnings, and it is only the beginning. Now, phase 2, we're looking to find partners to work with. We're looking for startups to better understand what your pain points and needs are. We're looking for banks, financial institutions to understand where their pain points are, and hopefully you can be able to facilitate transactions and commercial deals between these startups and financial institutions. Lastly, we plan to launch and run this accelerator. We hope that end of Q1 of 2021, we'll start with both Europe and China, and then move into the US shortly thereafter. And so this sort of gives you, again, a high-level overview of our mission and our vision. And we welcome any thoughts. If there are people that you think we should be talking to, feel free to reach out to us. We'd be happy to connect. That's it from my side. Aaron, any last words? And Yafu?
No, just thanks again for your interest and support. This is just the beginning. Please feel free to drop questions at this time. We're happy to try and answer any questions you have about the report. We also know that more questions might come up as you're reading the report, so feel free to reach out to us directly. But this is going to be front of mind for us for the next year, and really encourage engagement and participation.
That's great. Thanks, Aaron.
Yeah,
I'm just sorry, Yafu, go ahead.
No, go ahead.
No, Yafu, finish it out. I thought.
Okay.
Yeah.
All right. I just want to thank everyone for your interest in the climate fintech ecosystem. I know everybody, this is an evolving system, and it's just the beginning, which is the right time. And if you have any questions, please drop them in the chat box or email us. We are excited and looking forward to meeting you in the future. I'll leave this to Andrew, and also feel free to just leave the questions.
Thanks, Yafu. Yeah, guys. So I'm just going to say a couple more things. What you see here is the link to the website. So for those who can access, you can go ahead and click download the report over here. It will pop up a pop-up box for you to fill in your information, and then we'll go ahead and send you a download link, as you can see over here as well. So this is the landing page. Let's see, and the report itself, I can also just do a quick share. Actually, better yet, why don't you guys just go ahead and download it? Follow the website, and you can go ahead and link, and that will include a download link. Thank you, everyone. I'll pass it back to Neha. If no questions, looks like no questions. Give it a couple seconds. All right, Neha, back to you.
Okay.
Go ahead, Yafu.
Yeah. I was just wondering to share some of the contents I haven't covered in the presentation. Since you're thinking about the questions, I think one of the questions some of you might be curious is that why China, as a country with the largest renewable market and some of the top fintech companies, have a fewer climate fintech startup than the other two regions. I think there are a few reasons. Number one, it's because the business model. Number two, the climate awareness, and number three, it's about the stages of the development of fintech. So number one, about the business models. So in China, you can see the peer-to-peer lending and crowdfunding business models are no longer viable because of those fraud activities back to 2016, 17, and there's a crackdown by the government. However, that business model are still popular in the US and the United States and Europe. And the market share there was about $100 billion US last year. So still very popular, especially to support many of those renewable projects and other eco-friendly projects. And number two is about the climate awareness. I have to admit that in China, the awareness of climate isn't that high compared to that in Europe and the US, because there was a climate strike, last year, but there wasn't any, vast social awareness on this topic. And lastly, it's about the stage of the industry. So now fintech has moving to the late stages, and many of the unicorns have really become really huge and dominate many of the subsectors like payment, lending, and leaving little room for the startups to grow. So all of these factors combined that make the climate startups, the number of climate startups, fewer than the other two regions. But having said that, it doesn't mean that the innovation environment in China isn't, in climate fintech isn't really good. And also the impact here of this climate fintech is really significant here in China as well. Like the small innovation can move significant amount of capital in this centralized, more efficiently implemented system. So this is something I'd like to add to the findings in the Chinese market. If you have any questions, and feel free to drop in the chat box or contact us by emails. Neha, thank you.
Cool. Thank you so much, Yafu. And thank you everyone for sharing all of this information and the beautiful report. Check out the link in the chat if you haven't seen it already, and you can download the full report there. And yep, and that's what it looks like. So with that, we'll close out this session. If you want to go back and review a couple of the highlights that we talked about, we will be uploading this to YouTube, so you can follow us along there and, pause on any of the slides or any information that you're wishing to digest a little bit more. And then coming up for Accelerate Energy series, we have events on focusing on equity in the startup ecosystem. And we'll also be closing out with some of the best practices for accelerators when it comes to incorporating policy, financial levers, collaboration, and more, how can we synthesize all of that and work collaboratively and cooperatively forward to bring about the clean energy startup ecosystem that we know we want and need? So I'll drop a couple of links in the chat. Feel free to share any other thoughts, and we'll close it out from there. Thank you all so much.
Thanks, everyone.
Thank you.
Have a good one. See you.
Bye, guys. Take care. Thank you.